Two brothers, one goal, $1 million. This is Road to 1 million. Let's get to work.
Hey, let's go. Episode 5. Honestly, I'm a little surprised me and Kate haven't gone broke yet in this account. Well, I'm not actually that surprised, but we did think it was a possibility that we'd be out of money after a month and a half. Sure. I guess I'm being dramatic here. But we're really excited to dip into today. We're going to just start with a quick portfolio update. Cade actually got us a new trade. We'll go over to what that is, kind of go into if I bought Robinhood or not, touch up on the big, beautiful bill, and just kind of share our thoughts for just the short term here, because we've already gone over the long term. Not much has changed in that regard. So we're going to do a little bit more short term and kind of our thoughts and what we think a few companies will do and react in the near term. So welcome back. Okay, you got anything else? Yeah, you're excited?
This will be a good one. I'm excited to talk about what we have today.
Yeah, okay, perfect. Let me just jump right into the current portfolio. So this is up to date. I just updated the numbers on the price shares. This is what my portfolio looks like. Just to touch up. Total balance is at 6851 right now. I'll bounce back a little bit. Obviously, I have a ton of holdings. Ton of my portfolio is Tesla right now, and that call option and shares. So that's been affected by it a little bit, and that's why I was a little bit down from last week. But Nvidia is I've almost doubled my money in my NVDU of when I bought it, so I'm pretty happy with that. Still feeling good about my Oklo trades. It's kind of been all over the place. STX, the one thing that Cade didn't do that I did, up 24%, not bad after a month and a half. Okay, do you want to just share kind of what we did with our APLD? Because I know that you hate
the Nancy Pelosi trade. So, the key to investing is when you regret something and you've made a bad decision to double down on it. So that's what me and Mac did this morning.
Let's go!
So I'm always researching. I like other people's ideas. I'm always looking into things. And I just saw something earlier today that said, APLD, everything we've researched in the long term should do really well. In the short term, we're having hiccups, whatever. But I just saw something that said that they think there's some big things coming, especially with some deals they're closing and the nearest earnings. And so anyways, I believe we both did, but I doubled down. So now I own 2 of those call options. This is actually an idea Mac has that I actually kind of like. Sometimes you don't time it just perfectly, and so your option goes way down, but then if you buy that same option when it's down, as it goes back up, it just flies because you can get it for such a cheaper price. So if you actually believe in a trade you made, but it doesn't work out in the perfect timing, you can see that. So the current value of Mac's APLD 13 call is what you can purchase another one for today. So you're getting the same risk tolerance, the same opportunity, but that's now the current price. That shows you, what you lost on the current one, but you can buy back in at that price. And then if it takes off like we thought, that one will be worth exponentially more than the other one. So that's kind of the idea behind the doubling down.
Right, yeah. And honestly, I'm still feeling pretty good on this. I know it looks bleak, down 81%. You can see I added a return column just to kind of show you how each category is performing. Down 81%, but like Kate said, I actually bought one at 11, so I added like $24 more to it. But if this call option doesn't even need to get back up to this original price for me to break even now, because I have this. So if I actually really do think by earnings in, I think our call options expire September 19th. So we still got like 2 months. Right, we got 2 months to go. So, APLD has good earnings, has good news, which I think it has some momentum. It just kind of had some noise, and I'll get into kind of why I think it went down. But yeah, that's kind of the idea behind me and Kate doubling down on our calls, baby. We're locked. Big money. You don't get big money by not doubling down on bad trades, Kate.
You can't lose your whole portfolio except for one bad trade at a time.
Exactly. Honestly, though, I know this trade has looked bleak now. I still felt good about it because you never know. I mean, momentum. I mean, APLD could have easily, gotten to 15, 16, 17. We would have doubled, got out. It would have been great. I think after the announcement of that CoreWeave deal for $7 billion, APLD is still fairly new. They don't have a positive net income yet, which is actually some of the greatest companies me and Cade like to invest in, because once a company does go positive, it shoots up their earnings because it means their roadmap and their growth is now being profitable. And so we like that early stage factor. I think there was a lot of short selling of APLD driving the price down below $10. Purchased 7 more shares on top of it. I did have 38. I have 45 now. Drove my cost basis down. But I was reading a lot of reports that one of the reasons I was driving the price down is because a lot of people were shorting it, selling it off, which does cause, certain stocks to drive down, because when you sell in large quantities, it will drive it down. If you buy in large quantities, it'll drive the price up. That's kind of the nature. Investors like me and Cade, we're not going to affect it by buying and selling. I'm talking about hedge funds and institutions and stuff like that with large amounts of capital who are selling off, large amounts of the shares. That's what will kind of manipulate the market. And so I think that is what drove APLD's price down, which made me want to buy it in at a better price, which is what I did. And this is a little foreshadowing. This is kind of one of the concepts behind why we did our mystery trade. You can kind of see here. We're pretty pumped about this. Cade will take the ropes on that one though. But yeah, this is what the portfolio looks like. We're about a month and a half in. Actually, no, we're almost at 2 months, Cade. Didn't we start end of May?
Yeah, end of May.
End of May. So yeah, just almost at that 2 month mark. Pretty pleased with performance so far. We'll see if some of these really take off to the moon. We're pretty pumped, but Cade, do you want to? Yeah, go ahead.
So just on the APLD trade, one discussion Mac and I had this week as well is sometimes you make the right trade at the wrong time.
Yeah.
Right. And so us doubling down. And another thing we talked about, and this is more my philosophy than Mac's, but one of my favorite things to do is to find companies that are down for bad reasons and using them. And some of the companies we've been investing in or talking about are at all-time highs. We literally couldn't have invested in, APLD we invested at the all-time high, which isn't always a bad thing and can work, but does make it a bit riskier as well. I mean, that's what big money's for, but
that's
it
big
does
money.
make it riskier.
We wanted the upside. We wanted to catch the train, and the train just stopped a little premature, and that happens. So
you want me to go over the Cade's research at 9 p.m. last night and what it led us to do this morning?
Let's go over a legit research trade, the 2 a.m. spark. I love it. Let's go.
So last night I was watching a video, and it was talking about how SOFI has a huge short squeeze at $21. So essentially, a ton of people betting against a stock, and then if their options expire, each option has an expiration date. It's almost always Fridays. And so today's Friday. And anyways, what it said is if SOFI ends above 20, tons of people are going to have to buy the stock because of shorting it. And, when tons of people, it's like the opposite of what Mac talked about with APLD. If tons of people have to buy it, the price just has to go up as more and more people buy it. So anyways, I immediately text Mac this morning before the market opens. Hey, dude, short-term SOFI call option, 1 week. If we have the short squeeze, we could double our money. If we don't, it's whatever. But I bought it this morning. I'm already up 41% on the trade. And then if it actually happens like the guy said, and what's funny is the guy goes, I'm pretty sure the short squeeze is going to happen. I would not recommend making any trades based on this because it's super risky. But I'm like, big money, baby.
Money.
That's what we do.
Big money.
And so I'm pretty pumped about it. The current price of SOFI, I don't have it in front of me.
You want me to get it up there? Let me just throw that up on the screen there.
Ooh, 2171.
Yeah, so
if that guy's right, I mean, we do have a couple hours where the market's still going to be open, but if that guy's right, we're well above it, and there's going to be a lot of upward momentum. And since we are doing such a short-term, high-risk, I think if we get, a 5-10% jump, Monday morning, we'll just exit, and we'll probably have doubled 2.5x our money, and it'll be a really cool trade.
Yeah. Or we keep it for a 30% jump and 10x our money.
See, but after the short squeeze happens, I mean, that's our theory, that's our thesis.
Right.
The rest would just be blind speculation, which we love.
And yeah, Nancy Pelosi 2.0, guys. Nancy Pelosi 2.0.
But anyways, the other thing is SoFi is on a tear. I actually still don't think it's at an all-time high. I was actually looking into its history, and I think at one point it was worth $25 or something. Yeah, it was.
Yeah.
But
Yeah,
that
you're
was
right.
like years ago.
2021.
And
Yeah.
so, and this has actually been a stock I've liked for a while. I actually bought shares.
Yeah, did
at
you buy it
6.
when it was below 5? Oh, okay.
No,
So
650 is my lowest, and then I bought again at like 15. So, but yeah, I've just liked it as a stock in general. But then so that's the other thing I like about this trade is, you know, even if the short squeeze doesn't happen, I just like SoFi right now. So
Yeah.
that's why I felt so good about it. And we are both in it. And in classic fashion, I should have done more, and I knew, and I felt good about it. I did the least amount I could at risk. And Mac not only did what I did, but he tripled down on what I did.
Quintuplet down. I think, did you
So-
only get one option? You got one option, right?
I got one.
You got one? Yeah, I did 5.
But what's your total invested?
My total invest is like 270.
Yeah, see, my total invested's 130. So you only so your return
Yeah,
will
a
only
little
be
more than double. Yeah, okay. Yeah, you're right. Actually, your return, because you got it in a little before me, and maybe people will be curious to know, Cade's strike price is actually below mine, so every dollar increase will increase the value of his call option higher than a value of my option, because my strike price is 22 and his is 20. So even though he only has one, if it like explodes, his one option will be valued at significantly higher than mine, depending on how high it goes. But yeah, we'll see what I want to do with it. I mean, if there's like a pretty big jump and I like double my money on Monday morning, I might just hold on to 2.
I was going to say, the nice thing about doing 5, and I'm trying to get better about this, is that, yeah, you can split it. You could sell 3, keep 2, and then you made big money on the trade, and all the upside's just upside. So I love doing stuff like that.
Yeah, so we'll see what happens. Mine is positive too. It's not up 40%. I think I'm actually just a measly 4% right now because I got in too late. But if there's a 10% jump Monday morning, 5%, 10% jump, it'll be nice.
We're going to be very happy.
Yeah, we'll keep you updated with how this trade goes. I'm pretty pumped. And statistically, what I've learned from trading with Cade is usually he gives good advice, and not advice, usually he gives good trade suggestions. And I think I've never lost money off listening to him making a trade suggestion. I don't know if you've ever given me a trade suggestion where I've lost money. I don't.
I don't think, yeah.
I actually don't.
I've got a pretty good track record.
At least anyone that I've listened to and executed, I think I've always made money. So that being said, I was feeling pretty good. That's why I did 5 options. We'll see how it plays out. Might be a bust. Who knows? But we're feeling pretty good about it. And we just like implementing a short squeeze kind of vibe from our research. Hey, if people have to buy, I mean, it's going to bump up the stock price. And this isn't just like regular people like us with call options that have to execute. Like today, this is like a mass. Like this is millions, billions of dollars that need to execute, which is what's going to drive it up. So yeah, we'll see how this plays out. But quick side note, did you have anything else you wanted to go about SoFi?
No, I love
Before
it.
we go? Okay.
But great company for everyone, by the way, as well.
Yeah,
Doing
I know.
amazing things in general.
People are liking kind of their direction they're heading. If you haven't researched it, definitely recommend, see if it's like a good option. I actually don't have anything but these calls in SoFi right now. Not that I don't like SoFi, I just like other things better. That's kind of simply my thing. But your boy, I know I talked about this last time, definitely invested in Robinhood.
He did it.
And I'm loving it. I just wanted to...
That's in a side account, right?
I just wanted to do a quick side thing because I know like last episode I was like, hey, there's like a 99% chance I'm in not Robinhood. I'm officially in Robinhood now.
But I didn't see it in your big money, right?
No, I didn't have it.
Just to confirm for everyone, so they're not expecting to see it.
Yeah, there's not in my big money yet. And here's the reason why. It got up to over 100, and then when I bought it, it was like 91. And so I knew like it just went down because the market thought overcorrection of their tokenization is what my opinion was. And so I actually just bought shares. And I was actually doing some research. I told Kate, there's a double leverage Robinhood. Now, I'm not going to do that yet. I know leverage accounts just have too much decay at all-time highs. I don't know if Robinhood's just going to explode now. But I will say this is definitely on our watch list. If Robinhood gets to like 70, 60, I'm going to get some calls. I'm going to get the double leveraged ETF. I think it's Hooks, Hoox. Check it out if you're interested. But it's just not, and me and Kate are just taking the information we've got. We love Robinhood. We just don't think it's a price right now where we're all in our big money specifically, right? We think great long term.
On that, like after we talked about Robinhood and talked about liking it, I mean, I talked last episode about debit credit spreads, and I actually did one on Robinhood in my side account when the price was around 91, like where Mac was talking about. And I actually like doing things like that in the short term with, you know, lower initial capital. What's funny is I did it in not my big money. The reason I did is because my big money was not approved to do. You have to have a certain level of options trading to be able to do strategies like that. And I wasn't approved in Fidelity, which is where we have our big monies. And so I did in my Robinhood side account, and I just killed it. And so
Hey, but you're approved now, right?
I'm approved today, so now we can
do
some of these
let's go
spreads in Fidelity, looking for the next opportunity. And yeah, I'm pretty pumped about it because the capital to return, like, it's technically a less risky, but it's very risky. And the main thing that I like about it is it's a way to get into one of these big companies in more risk than just buying shares, with more reward and less capital. So that's kind of the idea behind it. And so I'm looking for the next one to do it in, because I think they're awesome.
Right. And what Kate means by like capping gains, what did you say before that about the upside? Just this kind of option takes away like unlimited upside.
Unlimited upside.
But like we're capping it. I think you said you're capping it at 2x your money.
Yeah, so most of the ones that I've been doing, you know, they say, you know, if you put in like $390, your max gain is like $400. So your max loss is what you put in, you know, $390, and then if your max gain's $400, I mean, yeah, so you are capped, but if your capped is double, that's an amazing return still.
Right, and it's a double your money after a month, I think is what your time horizon was. So if you're doubling your money every month, that's why it's like you're capping your gain. But like, if you get that cap, you know, because it's for a month, if you're doubling your money every month, that's an insane return throughout the year.
And be okay.
Yeah.
We're going to make it. We're going to make our goal if we double our money every month.
We'll make it. Yeah.
Actually, while we're talking about that, Mac, I think you should mention what you talked to me about the other day. So we have our goal, 6,000 to 1 million. Mac actually did the math on how we get there.
Oh, yeah. I was looking into like realistically what our annual return needs to be over 5 years, and me and Cade need to get 158% return for the next 5 years. And then actually that's me. You're gonna need a little bit more. Because
8%. So just to put things into perspective, like a quote unquote good return in the stock market is 8%, 9%.
Yeah.
For a long amount of time. I mean, like S&P 500.
Yeah.
You don't get fired if you're getting that on average most of the time in the financial world.
Right.
So we're like, once again, this is big money. Even the debit spread that I'm saying is like, it's like, if you talk to anyone that's normal, that's ultra risky. So we are implementing ultra risky strategies, and we just know, you know, you hit one of these big, it could take, like our SOFI. I mean, if we 3x our money, that'll be like a 25% gain, and on that like of the whole account on that portion of the money, which would just be really cool.
Right. And I'm just confirming this real quick. Oh wait, actually, was it 178%? Oh, it was 178%. My bad.
Wow.
Yep. Yeah. Even worse. But so just to give you a perspective on our goal this year, I'm trying to end my account at just shy of $17,000, and that will be a really successful year one.
End of
for
year.
Me. End of year.
May to May or end of year?
Yeah, May to May. It needs to be May to May.
May to May. So full. Okay.
So yeah, that's my goal right now. And I will say this, I'm really close to on pace to that after are 2 months. Like my account, when my account was above $7,000, I was actually ahead of pace, and then with the Tesla drop, I went right below. But if I keep this traction, well, I guess me, because I didn't do an Oklo straddle. I feel like that's just gonna be a meme throughout the podcast.
Dude, the Oklo straddle. But the bottom line of how we're doing this too is like we probably won't talk about that goal much. We probably won't talk about if we're on pace or not on pace, because like the idea behind this is, you know, we hope to 10x that TSLL call. That could happen January of this year. That could happen. But then we need to find the next big thing, and we think, you know, we hopefully can find we can hopefully find one or two of those a year, which is what you need to be able to accomplish a goal like this.
I think before we dip into the big beautiful bill a little bit, our next thing that me and Kate are going to dive into, and we'll keep you posted, because naturally investors just think of what company is going to explode. Like what company do I see just being a great company moving forward, right? And so you think of Apple, you think of Tesla, you think of those big companies. It's like, yeah, well, I'll just put my money in that. Me and Cade collectively have decided one way that will really help us get to our goal is seeing what companies are not going to make it, what companies are going to fail. Like, there's been stipulation that Uber, if Tesla Robotaxi is, completely, past regulations and takes over, that Uber's company is going to go down. And so me and Cade are trying to get better at researching companies that we say, hey, they made a great run, it's on the decline, we need to short this. And just so you know what shorting means, it means we sell the shares first and we buy them back later. Or we put options on it, which is essentially the same thing with calls and buying shares, right? You're saying, hey, I want to sell 100 shares at this price. If it shoots down, you can capitalize a ton from the premium. So we're going to try, especially in the next couple weeks, to also give you some info on companies that we like. Hey, this was great, but I think you're gonna go down now. You know what I mean? Like, I think that this was kind of your peak, your growth phase, because that happens all the time. And people make really good money when they can make sound decisions on the reverse. So we need to be looking both sides. Like, we need to be, hey, these companies are going to take off, and we have the conviction, that research behind it. And then we have, hey, these companies we don't see, being super successful, kind of plummeting, and then we can make a ton of money that way too. So we'll keep you posted on that. But me and Kate have just been talking a little bit about that. We don't have like solid companies. We've just been talking about, a variety that you may or may not have heard. But yeah, there's nothing official yet, nothing to be said here. But just wanted to bring that. Kate, did you have anything you wanted to add to that?
I mean, only if we go into the big beautiful bill and that research, that's where I'll mostly talk about it.
Okay, yeah, let's just dive into that then. And you can just kind of give a little background on that.
Yeah, so the Nasdaq's at all-time highs, the S&P 500's at all-time highs. A lot of the companies that we're looking at are at all-time highs, which is like, I kind of talked about this before, but I don't love getting into super ultra risky strategies with companies that are at all-time highs. And so I started doing some research. I wanted to find out which companies would be most negatively impacted by the big beautiful bill. So a lot of the research we're doing is through videos of other people who are experts on these companies. We are using AI. Both of us have ChatGPT memberships. In this research, I was kind of looking up, okay, who's going to be most negatively impacted by the big beautiful bill? Since I think now might be a good time to short with everything so inflated and positive, even though Mac and I both believe the stock market goes up over the long term. There's big money to be made if you can find companies that aren't going to make it through situations. And so
right.
I looked it up. Some of the ones that were mentioned were Apple, but we don't hate Apple. I don't think either of us love Apple, and you can see we don't talk about it and are in it, but they're just a cash cow. They make so much money. Everyone's going to buy the next iPhone. Everyone's going to buy the next computer. They just don't grow. So we don't want them as like a super up, but we don't believe in them down.
There's not like a huge Apple's gonna explode reason, right? Like,
yeah.
I mean, we have our AirPods, we have our iPhone. I have a Mac. I think you actually switched from a Mac though. Don't you have a Windows?
No,
now?
I needed a different computer for one software, but I still have the computer I'm on right now is a Mac.
Yeah.
Yes.
But yeah, essentially, there's just no big info that we've seen from Apple that's gonna change it from what it is, which is obviously the third largest company in the world, right? Or fourth, something like that. We don't just see it just gonna just take off. You know what I mean?
So,
anyway.
and then another one that came up with is Boeing. I
Yeah,
can't speak
Boeing-
for either way with Boeing, so we're staying away
Boeing's
from that.
crazy. Yeah,
Then a
Boeing's
couple other
crazy.
ones were like Deckers. So there's some clothing companies, Deckers, Under Armour, G3. And like when we looked into all of those, like Under Armour was one that I was actually very interested in. But if you look at their like 5-year chart, they're already down 70%. So do we really want to short a company that's already down? Like you can win on that, but that's kind of like shorting a company that's already down huge is like buying call options on a company that's already up. It's just not.
It's like investing APLD
at its all-time high.
at its
losing all of your money in 3 weeks. And then the other one it mentioned was pharmaceutical companies, and then I had it list like which pharmaceutical company because it didn't give any options.
Mm-hmm.
And you know all the ones that we actually know from the pandemic that broke out in 2020. I think for some reason algorithms on YouTube don't like when you actually say the name, so I won't. But like Pfizer, Moderna, all the ones you've heard of from that. And, looking into the companies, they're actually down quite big. And I think it's from the comeback from all the spending that was happening during that time. And so all the ones that we maybe would short are already down. All the ones that are up from this point, we don't believe negatively enough about too short. So through the research, we didn't actually find any to do it.
Right.
But I do think right now is a good time. And Mac's actually the one that brought it to my attention to be looking for companies to do that. So we're on the look to short as well. But I haven't found anything.
Yeah. And I honestly think I think one of the big things that Trump was trying to get out of the big, beautiful bill is I think there's a lot of worry about how much debt was increased. And so I think they're literally shooting for explosive growth to kind of cover that. And so that's another reason that me and Cade, at least for me, I haven't talked to Cade much about this, but that's why I've been more convicted on companies that are going to explode. That's why I love my Tesla call option. Even though the big, beautiful bill is going to hurt electric vehicles, honestly, I believe Elon Musk didn't even want the federal tax credit anyway because he believed that companies should survive on its own and not be subsidized by the government. And he says that's a waste of spending. So like, I don't know, like there's a bunch of stipulation about like how it's going to affect Tesla. At the end of the day though, me and Kate aren't invested in Tesla for their cars. We think they're sick, but we're invested for other things. And so at the end of the day, I think Big Beautiful Bill is going to explode their robotics division, their energy division, right? If there's that explosive growth, we're going to be really happy with the decisions we've made. We really got to be pretty convicted that a company is going to fail or in like the near term or before that where we would need to change our mind. But we're definitely looking into that for sure. Okay, well, I think that wraps it up, Kate. I think that we covered kind of a lot of stuff. We're pretty pumped, honestly. I haven't seen Cade this invigorated since week 1.
early next week we'll do you want to know what we didn't talk about, which we could but don't have to? The Tesla straddle and then recall and then restraddle.
Right. Did we not go over that last time?
I think so. We told everyone
that we were going to do it, but we haven't. Yeah.
And then bought the call option. And then we ended, anyways, it went well for both of us.
We restraddled Tesla, and then we restraddled again. We'll see. I mean, Tesla's just volatile right now, and we're loving it. So in the short term, we just think that's going to keep being successful. We really do.
I don't think there's anything else. So.
Okay. Dude, well, cool.
You guys, big news the next time we come on to see what happened with SoFi. Next time we come on, we'll know if we killed it or nothing, or so we'll update you on that.
I won't have any more cash to make extra trades. I'll have to sell out of something.
Max at $7 in cash. I'm currently at 300, so we're cash low, but that's part of big money.
Hey, but if it's a negative, I mean, there's a chance that we could sell out and just recoup some stuff. Even though technically that's not what you're supposed to do, especially big money. But we can get into that another time. Anyway, hey, thanks for tuning in. We really appreciate you guys, listening. And if you have any comments or want us to talk about anything that just label some companies down that you want us to do some research on, talk about, try strategies with. We'd love to do it. So just let us know. But yeah, stay tuned for next week.
Peace.